All right, let's talk about something that confuses a ton of people: fixed rate versus variable rate mortgages. Now, this is one of the biggest decisions that you're going to make when buying a home. And honestly, it's no wonder that they feel stuck. There's so much misinformation out there. But here's the deal. The way you decide between these two options might not be what you think. And I'm going to explain something that will surprise a lot of people. And that is why fixed rates are sometimes cheaper than variable rates. And stick with me until the end, because I'm going to share with you a simple strategy that could save you tons of money, whether you go with the fixed or the variable. By the way, really quick, if you're new here, my name is Glen Hopkins, and I create videos all about Canadian real estate, especially around the Vancouver and Fraser Valley area. So if that is something you're interested in, please go ahead, hit that subscribe button, and that way you're not going to miss out on any of my upcoming videos. Also, if you would like to chat about buying or selling home, there is a link in the description box below where you can schedule a call with me. And just know that there's never any pressure, there's no obligation. I'm really easy to talk to, and I just want to be here to help you however I can. Also, if you'd like to learn about some really great strategies that can save you literally tens of thousands of dollars on your home mortgage, I'm going to put another link in the description box below where you can get a free copy of my book, Mortgage Secrets. Okay, with that said, let's get into this, and let's start off with talking about fixed rate mortgages. This is an option that most people think of first, and it makes sense. Fixed rate mortgages, they give you stability. Your rate, it always stays the same for the entire term, which is usually about 5 years. Now, if you're someone who likes knowing exactly what your payments will be every single month, this could be a great option for you because there's never any guessing. There's no surprises. It's predictable, and for a lot of people, that is a huge thing. But here's something that you might not know, and that is that not all fixed rate mortgages are the same. So you want to look for a fully featured mortgage, not a discounted one. Why? Well, because a fully featured mortgage is going to let you refinance more easily if rates drop, whereas discounted ones, well, not so much. Oh, and another big thing is that you want to avoid big banks for fixed rate mortgages because they often charge massive penalties if you break your mortgage early. And we're talking about tens of thousands of dollars here. This can be a really big deal, okay? Now, speaking of penalties, let's talk about something that catches a lot of people off guard, and that is the mortgage clauses. Some lenders include something called a bona fide sale clause. Now, that sounds a little bit fancy, but all it means to you is this. It means that you can't move your mortgage to another lender unless you sell your home. And that's why flexibility is key. So lenders like MCAP, First National, and CMLS are all going to be great options because they offer fully featured mortgages with lower penalties if you need to break your term early. But here's the catch. These lenders, they also have cheaper options with fewer benefits. So make sure that you're getting the right kind of mortgage. You don't want to get stuck with something that looks good up front, but then later traps you down the road. And these clauses, they can be sneaky. It's kind of like signing up for a gym membership, and you think you can cancel anytime, but surprise, you're locked in. And with a mortgage, it's way more expensive to get out. Now let's talk a little bit about the appeal of variable rate mortgages. Variable rate mortgages, these are a little bit different. They are usually cheaper up front, and they offer a lower penalty if you need to break the mortgage. But here's the thing, variable rates, well, they can go up or down depending on what the Bank of Canada does. So, your mortgage payments, they might change over time. So here's my advice. If you go with a variable rate, make sure you choose an adjustable payment, okay? This way, your payments will change gradually when rates go up instead of getting hit with a massive increase all at once. But I'm curious, what about you? Are you somebody who likes a little bit of risk? You're okay with that? Or do you prefer knowing exactly what your monthly payments will be? Go ahead, let me know in the comments below. I'd love to hear your thoughts on this. Now I'm going to reveal why fixed rates might actually be cheaper than variable rates, and also when it's smarter to lock into one in just 1 minute. But first, let's tackle the big question, and that is, what happens when fixed rates are actually lower than variable rates? Because right now, variable rates are hovering around 5%. But fixed rates, well, they're closer to 4.3%. Now, this situation is unusual, and it's known as a yield curve inversion. So normally, variable rates are lower than fixed rates, but economic conditions, they've caused this to flip, creating an opportunity for borrowers. So in this scenario, opting for a short-term fixed mortgage, like 2 or 3 years, can be a smart move because it allows you to lock in at a lower rate temporarily while waiting for variable rates to stabilize or to decrease. Now, many people are choosing this strategy to save money and gain some financial predictability during these uncertain times. Okay, so let's talk about what the real difference is between fixed and variable rates. Fixed rates, they're going to give you peace of mind. They're predictable. You know exactly what you're going to pay every month, and that makes budgeting a whole lot easier. Now, variable rates, they're more flexible. And if rates go down, well, so do your payments. And if you need to break your mortgage early, the penalties are usually much smaller. Now, over time, variable rates, they often save money compared to fixed rates. But the choice ultimately is going to come down to your priorities, whether you value stability and predictability or you're comfortable with some uncertainty in exchange for some potential savings. Now, one more thing that I need to mention is that if you're trying to time the market, please know that it is nearly impossible. Yes, there are some various factors in the marketplace that can give you an idea of where things are generally headed. But in the end, even experts, they can get it wrong, and they sometimes do. So instead, focus on what fits your life right now. Are you okay with the risk of rates changing, or do you want that stability of locking in on your payments? That's the real question that you need to answer. But here's the thing. There are a handful of proven strategies that can save you thousands, if not tens of thousands of dollars on your mortgage payments, no matter which mortgage you choose. And they're super simple, they're effective, and most people don't even know they exist. And guess what? I'm going to explain them on the next video popping up right here.